I'm Tim Obendorf with Stewart Advisors. Today I'd like to spend a few minutes discussing donor advised funds. Donor advised funds are one of the best tools to efficiently fund your charitable giving objectives. A donor advised fund, or DAF, is a giving account established at a public charity that allows donors to make a charitable contribution, receive an immediate tax deduction, and then recommend grants from the fund over time. Here's a diagram of how a donor advised fund works. You, the donor, make a charitable contribution to the DAF, and this contribution could be cash, marketable securities, real estate, or even an interest in a business. The donor advised fund then sells the asset and invests the proceeds in a fund that you direct. Over time, you can request grants be made from this fund to the charities of your choice. This tool has many advantages over either direct giving or a family foundation, but it comes with fewer restrictions and lower costs than a foundation. Here are some of the major advantages. First, a donor advised fund separates the timing of a tax deduction from the timing of the grants to charities. So when you make a cash gift, you're making the gift to the charity in the same year that you get the tax deduction. With a donor advised fund, you can make the charitable contribution to the donor advised fund this year and then have the donor advised fund make grants to charities over the next 2, 3, 5, or even more years. Second, a donor advised fund simplifies your reporting for tax purposes. If you've ever given to a charity, you know that to take a tax deduction, you need to get a tax confirmation letter from each of the charities that you make donations to. With a donor advised fund, you only have one charity that you're giving to, and you get one tax letter. That makes it very easy to file your taxes. Third, a donor advised fund facilitates complex gifts. So most small charities know how to handle gifts of cash, but they don't know how to handle appreciated securities or real estate or privately held businesses. A donor advised fund can take those assets and convert them into funds that then can be granted to those small charities. So you can continue giving to the charities you've always supported, but you can use assets that you might not have thought were available to make charitable contributions in the past. Fourth, a donor advised fund can help promote family philanthropy. So when you set up your donor advised fund, you can name alternate advisors besides yourself. So your children or other family members can direct gifts to charities that they support. In addition, you typically set up a successor advisor so that when something happens to you, your family can continue to make gifts to the charities that you supported in your lifetime. Finally, a donor advised fund is much less expensive than a foundation. With a foundation, you have to do tax reporting every year, and you have to run it like a business. So you have a board of directors, you have to have certain governance requirements, and so all of those things are taken care of by the sponsoring entity that you set up the donor advised fund with. Typically, a donor advised fund costs a mere couple $100s to run each year. Here's an example of a couple, John and Mary, that would like to make a $100,000 donation to their favorite charity over the next 5 years. They have stock that they originally purchased for $10,000 that's now worth $100,000. John and Mary are in a high income tax bracket and they're subject to net investment income tax. So instead of selling $20,000 of stock each year and donating the proceeds, John and Mary decide to leverage their giving using a donor advised fund. When they make the contribution to the donor advised fund, they receive an immediate tax deduction for the $100,000 market value of the stock. The donor advised fund then sells the stock, but since it is a charity, it pays no tax on the realized gain. On the other hand, if John and Mary had sold the stock, they would have had to pay capital gains tax plus the net investment income tax on the $90,000 gain. The contribution to the DAF saves them over $58,000 in the first year. But then in future years, John and Mary can still take advantage of the standard deduction, which is nearly $26,000 in 2022. And at the same time, they can direct the donor advised fund to grant $20,000 each year to their favorite charity. So if you think a donor advised fund could help you in your charitable giving, or if you have other financial planning questions, please don't hesitate to contact either myself or my partner, Mike Kwan. We'd be happy to help you in either of those areas. Thank you very much. Bye-bye.